Welcome to the Transparent FX Academy. I'm Nick and I'm a top hodler in trading with over 190k reputation points. And in this video, we will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be analyzing the pair from a technical perspective, then we will go and see what we have when it comes to the order flow, so the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. So without wasting any more time, let's jump straight to the charts. In today's video, I want to speak about EURCHF because we do have very interesting price action and structure. So starting here from the monthly time frame, what do we see here on the monthly? We can see that in all this impulse to the downside, there is one candle not related to the move, and that candle is exactly the green one that we have here. Now, why is this a very important structured zone? Because when the market was showing very strong bearish momentum, the market did stop here and created this rejection to the upside, confirming this zone as an area of interest for this market. And since we are now breaking above it, if we will have a successful break above the zone, on the retest, we could expect a rejection higher. Dropping down on the weekly time frame, what do we see? Now here on the weekly, we can see how the market is pushing to the upside in a very aggressive way. We can also notice how this area of previous support here, turned resistance here, which is now again support, was just rejected to the upside. And as we are testing support and demand, we could expect more potential bullish continuation. Dropping down on the daily time frame, what do we have? Now, from a daily perspective, first of all, we have to notice how the market has been creating and completing the patterns. First, we had this impulse to the upside, after which we had the correction, continuation to the upside. Then we had the creation of this M pattern. After the M pattern, I made a full breakdown explaining why we wanted to see a potential rejection to the upside. And now the market has given us that move. And by the way, I will link in the description this previous analysis so you can go and check it out for more free education. But at the moment, what we can see is that first the market created this horizontal accumulation, and after the horizontal accumulation we got the rejection to the upside. Now I made an entire tutorial on accumulation and distributions areas and why those are so important for the market, and why most of the times you will see a move to the downside, horizontal accumulation, and then the rejection. Same thing for a distribution where you have a bullish move, horizontal distribution, and then rejection to the downside. You can go and check that one out. It's in the tutorial section. However, what we can see here is that we now got a new impulse to the upside. Now, after the creation of an impulse in the market, what we would like to have is a correction before then the continuation. Specifically, what we would like to have is for the market to provide a correction at least to the 0.32 Fibonacci taken on the daily impulse, which in this case would be lining up exactly here. Now, why is this anyway a very important zone? Because this is the previous support here, which is now again support here, which there is a good probability that the market could retrace to, and from which could then start a continuation to the upside, establishing an uptrend. Because always remember that in the market, you never go in a straight line, right? You never go just straight up. You want to see the market create a series of impulses and corrections, which are actually establishing the uptrend itself by creating a series of higher highs and higher lows. So in a situation like this, what we could expect is a potential correction to this zone before then getting a potential rejection to the upside for the completion of this impulse correction and impulse pattern to the upside. So before we go and see how we could approach this potential move to the upside, let's go and see what we have when it comes to the commitment of traders. So the CO2 data, which is what the non-commercials, so the biggest speculators in the market, are doing. Let's first of all check the data for the euro. Now, here on the euro, we can see how with the last reports, net positions have been growing. We went from minus 6k to now having plus 52k net positions, with 236k longs at the moment compared to only 184k shorts. So on the euro, net positions have been growing. Institutions have been shifting their positioning to the positive side and bullish side. If we go and see what we have on the CHF, we can see how we went from minus 5k to minus 20k net positions, getting very bearish, with another 2k shorts added with the last report reaching 23k shorts compared to only 2.6k longs. So the CHF is getting very bearish, the euro is getting very bullish, indicating that if we get this rejection to the downside, also from a COT perspective, so institutional perspective, there is a good probability to see a rejection to the upside. Therefore, if the market will correct to this zone, how we could be approaching this potential rejection to the upside? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries at that point, we could be looking for this potential rejection to the upside for the completion of this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say market environment shift and valid entries, that is all part of the mentorship program, which you can access now completely for free. The link, in fact, is in the description, and I really suggest that you go and check it out. Now, if you enjoyed this video, make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you, because obviously it helps with the YouTube algorithm, and I will see you in my next video.